Speaking of deflation, Cathie, Tesla's been cutting prices on cars. Investors have been cutting Tesla's stock price. You bought Tesla last year when it was cheaper than this. I think you bought some more, a good chunk, a little bit more than a week ago. Do you keep buying it as it goes down, if it continues to go down this year?
Well, if you've watched our trading, and we do publish our trades at the end of every day, you'll see that we've been trading Tesla at the margin. So when it is soaring and everybody's excited about the good news, as we move towards electric vehicles, we will take profits. And likewise, as investors and traders begin to fear that we're going to be in an air pocket, we've got a 5-year investment time horizon, and we think that in 5 years, most car sales will be electric. And that is a trend that lower prices actually are going to encourage. So that's the good deflation, as we've got electric drivetrain prices coming down.
Okay.
In price. Tesla can price down. It can price down if we're in a weak spot globally, and it does appear that we are, certainly China and Europe. And even here in the United States.
Let me challenge you there with what Hertz just did, backing away from EVs, saying, yeah, people really love Teslas. That's not translating into how much Teslas cost to repair and maintain, and the viability of them maintaining a fleet. So I understand that you're trading around it now, but for the people at home who don't necessarily do that day by day, where's your even mark? Where if it goes below here, that's when you're really pushing into it, leaning into it.
Well, we cannot talk about what we are going to do prospectively, but just to address Hertz, there is a learning curve with EVs, and I think a lot of people go to Hertz and say, I'm going to try my first EV, and they learn, okay, if you're going to drive 50 miles or 100 miles, you've got to start thinking about charging. So a bit of a learning curve. It is true that the repairs cost more, but maintenance also costs 60% less. So there's a bit of a trade-off. If you listen to Uber, on the other hand, Dara will tell you that they're encouraging more of their drivers to rent from Hertz and others because the drivers get more. Uber's take rate is not more, so it is really beneficial for drivers, and consumers love them. They're willing to pay up. So, when innovation is evolving and the infrastructure is moving into place, but not quite there, especially in terms of repairs, you're going to go through fits and starts like this. But the trend is undeniable. Okay. Last year, electric vehicle sales globally were up 28%, while gas-powered vehicle sales were up 9%. So share gain still.
ARK Invest CEO Cathie Wood has just shared some critical insight about Tesla's future. If you're a Tesla investor, then you've probably not been paying enough attention to this. Cathie Wood and ARK Invest are bullish on the future of AI, and they're working on the belief that the recent explosion in AI is largely attributed to the development of learning techniques and the emergence of large-scale neural networks. Wood, who is a high-profile, innovation-focused investor, has further highlighted the importance of AI and the convergence of technology platforms in a Big Ideas 2023 investor report.
OpenAI, and of course there was the drama around OpenAI and Sam Altman last year that seemed, at least in part, from what we can sort of understand, seemed to, at least in part, to be over how quickly we should be moving and how carefully we need to be moving when it comes to generative AI. Are we moving too fast?
I don't think that the technology is moving too fast. I think we all have work to make sure that whether you're in government or a business or a nonprofit, we're moving forward what I'll call safety and innovation at the same speed. And I think we should look back at 2023 as a year when the technology raced forward. And interestingly, so did the safety architecture. I feel very good about what OpenAI's been doing, what Microsoft has been doing, and others as well. It's not just us. But interestingly, governments are moving faster to put guardrails in place, first on a voluntary basis, then through laws and regulation, than we have seen in the history of digital technology. And while people tend to focus on Europe and the AI Act, the United States with these White House commitments or executive order, they look for differences, and there are some. I think what we sometimes miss is there's a lot of similarity. Fundamentally, what governments are saying is that they want this technology to bring new opportunities, but they really do want to make sure it's safe, it's secure, that people's rights continue to be protected. And that's got to be right. And so we have to find ways to work together. And I take a lot of optimism from the fact that I think, in fact, we are, and we're doing it at a rapid pace.
Sorry to interrupt, but just before we hear from the expert, we'd like to discuss a new trading platform we've started using called Cathie. Don't skip this part of the video because it is Tesla related, but not in the way you think it might be. Now, I know you may have your own platform for buying Tesla shares, and you should keep using it. Cathie, though, introduces a novel trading strategy focused on event outcomes rather than stocks. This platform offers you the chance to earn simply by leveraging your prediction skills. With Cathie, you can speculate on the likelihood of specific events. For instance, you might trade based on the number of cars Tesla delivers this quarter, or even if Apple will unveil a car this year. Furthermore, the platform isn't limited to tech or automotive events. You can also bet on cultural happenings like the Grammys or Oscars, as well as economic indicators such as inflation or interest rates. Cathie is a CFTC-regulated exchange that enables trading based on event outcomes. So what are you waiting for? If you're a US citizen or resident, you can sign up using the link below, cathie.com/Tesla TMRW, or start trading on Tesla deliveries this quarter and other unique markets. You can also download their mobile app to trade on the go. So let's carry on. ARK Invest's work is based on the concept of the real promise of new wave AI technologies and their ability to make work more productive. And perhaps the investment firm may be looking to bet on companies that are taking advantage of this technology. AI has found applications in logistics, streamlining supply chain management, and optimizing delivery routes. Similarly, it is transforming manufacturing with the implementation of smart factories, where robotics and advanced automation systems optimize production processes, reducing waste and increasing efficiency. Predictive maintenance powered by AI has also proven invaluable in reducing equipment downtime and minimizing operational costs. Hey guys, welcome back to Tesla Tomorrow. Why is AI a big deal, especially for a company like Tesla? Let's find out. Automotive vehicles and autonomous vehicles powered by AI traffic management systems are revolutionizing transportation, promising to reduce accidents and alleviate congestion. And Tesla's full self-driving software is expected to be one example of AI at work in real life. Tesla plans to make cars autonomous in the near future, reaching a milestone that all other EV companies can only dream of. And analysts have found this to be quite impressive, including Cathie Wood. According to Wood, several Tesla investors may not fully understand the potential of Tesla's plan, but she does believe that it is something that the company will benefit greatly from. But where does Cathie Wood see AI in the near future? Let's find out. But before we do, if you like this type of content, don't forget to hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla has started to release a new FSD beta update with some performance improvements, and this software enables Tesla vehicles to drive autonomously to a destination entered into the car's navigational systems, even though the driver needs to remain vigilant and ready to take control at all times. In order to make these cars fully autonomous, Tesla has frequently been releasing new updates for its FSD beta program and adding more owners to it. Tesla addressed AI more directly. For one, it developed semiconductors to power AI. Alongside this is the FSD chip to control autonomous driving features and the Dojo chip, Tesla's semiconductor designed for training and deep learning. Tesla also has developed AI software to help improve the driving experience.
We have to talk about Tesla and Elon Musk. And I know you just had a conversation on Twitter, X. This has been, I think, from day one, right, in terms of you starting out, that you've had this investment in Tesla. And I remember when we first talked and you were getting started, you talked about him being the next Thomas Edison and how his vehicles would turn the U.S. economy upside down. Having said that, there's an evolution and the EV world has changed. How are you thinking? It's still a top holding. How are you thinking about the Tesla story right now?
Well, first of all, Carol, thank you very much for letting me interview that time. That was nearly 10 years ago. ARK is about to celebrate its 10th year anniversary, and you gave us that opportunity, so thank you. The world is evolving, actually, I think, even more closely to what we expected. Because we expected a lot of traditional auto manufacturers to see the writing on the wall and rush as quickly as they could into scaling big time into electric vehicles. And what has happened recently? Both GM and Ford have said, we're stepping back. We're not going to do this until it's profitable. The problem with that is, in order to be profitable, they need to scale. That's how this works. These are learning curves that they are riding down, and those are expressed in cost decline. So the fact that they're pulling back means there's more share for Tesla and others who choose to go for it.
And
ARK Invest CEO Cathie Wood believes that Tesla is probably one of the biggest beneficiaries of AI, and it is the only auto manufacturer to design its own AI chip. According to her, Tesla is in pole position to be the leader in a winner-takes-all market called autonomous taxi platforms. It's no secret then that Cathie Wood is a fan of Tesla. According to the bull of Tesla, the real sleepers are the companies with not only AI expertise, but also domain expertise and large pools of proprietary data. She also added that the latter will make all the difference between the winners and the losers. And there's more. Cathie Wood is also predicting that there will be, between now and 2030, autonomous taxi platform revenue opportunities between $8 and $10 trillion from $0 in revenue now. Wood also stated that Tesla has more real-world driving data than any other company, and tech companies are trying to get into this platform of opportunity. Wood and her team outlined in their Big Ideas 2023 report that market participants should be looking at 5 converging innovation platforms that have the ability to define this technological era, namely AI, robotics, multi-omic sequencing, public blockchains, and energy storage. The recent report stated that AI is catalyzing all kinds of changes in several industries, and investors are yet to do enough research on how profound this impact is going to be. Even the market is scrambling to try and understand how AI is going to impact the world. ARK's report projects some big numbers for the future. It stated AI should increase the productivity of knowledge workers by more than 4-fold by 2030. At 100% adoption, AI could increase global labor productivity at about $200 trillion compared to the $32 trillion in total knowledge worker salaries. Cathie Wood has been looking at companies that integrate artificial intelligence and data analytics into their software. And Tesla, which is her ETF's top holding, has one of the largest pools of real-world driving data, and the world is poised to lead the AI revolution in the auto industry. The thing is, ARK is betting that these long-term big salaries will reignite returns. While we won't fail to mention that Tesla has pulled through some pretty tough years, and while technology stocks have been pretty challenging from 2022 to 23, Cathie Wood believes that the chapter for that is over. And although one can never say the coast is clear, as there are always risks, she thinks that the tech market is on the other side of the most difficult time that innovation-oriented strategies have never had. Wood reiterated ARK's 5 years investment time horizon, stating that the company's investment is for the long term. She added that it's very important to keep an eye on the prize and do research right now on how technology is going to evolve. And probably it could evolve very quickly during the next few years, as Wood predicted.
The world is evolving, actually, I think, even more closely to what we expected. Because we expected a lot of traditional auto manufacturers to see the writing on the wall and rush as quickly as they could into scaling big time into electric vehicles. And what has happened recently? Both GM and Ford have said, we're stepping back. We're not going to do this until it's profitable. The problem with that is, in order to be profitable, they need to scale. That's how this works. These are learning curves that they are riding down, and those are expressed in cost decline. So the fact that they're pulling back means there's more share for Tesla and others who choose to go for it.
And Cathie, I want to keep the conversation going on Elon Musk, but I want to bring it to the ARK Venture Fund. Of course, it's not an ETF. You invest in private companies, et cetera, in there. And you take a look at the portfolio, you have SpaceX in there, and you also have X, formerly known as Twitter. And in July, you had told the Wall Street Journal that you had written down your Twitter stake by 47%. Fill us in on the past couple of months. Have you written it down further, or how has that changed?
No, I think it's still there. We have to be very careful. This is an interval fund. It is a 40 Act fund, and we have to market every day. The good news is our clients can get in and have access to these amazing companies for just $500, and they get quarterly liquidity. So that's the good news. The markdowns are simply, if we see in the secondary market employee stock trading at a steep discount, we have to take that into account. If we see others in the more traditional asset management world, like Fidelity and others, marking their holdings down, we need to take that into consideration during our daily mark-to-market. So it's an abundance of caution. We have a 5-year investment time horizon. Do we think that's where X belongs in terms of valuations? Absolutely not. Absolutely not. A roughly $20-ish billion valuation for what we believe truly will become the everything app. Think WeChat Pay. Elon started his entrepreneurial career in the payments industry, and he's been thinking about this for a long time. He now has money transmitter licenses in more than half of all of the states, which we learned on Twitter Spaces, or on X Spaces, I should say, the other day when we had our interview with him. So that's exciting. He's going for it.
The potential opportunities that AI presents are immense. As AI training systems become more capable of integrating into our daily lives, they will increasingly augment human capabilities and contribute to the betterment of society. However, this projection is by no means a sure thing. With the technology in its infancy and the forecast built on a lot of assumptions, the technology has already faced controversy over the programmed-in racial bias, for example, with ChatGPT's compositions frequently littered with inaccuracies. Despite the impressive progress of AI, there are still challenges and ethical concerns that must be addressed as the technology continues to evolve. Privacy, security, and the potential misuse of AI are critical issues that require careful consideration and regulation. Ensuring AI's transparency and explainability is also essential, as it is minimizing the potential for algorithmic bias. Aside from the issues of safety, there are also concerns that AI will replace human jobs. Several industries and individuals have written about the potentials of AI replacing workers instead of augmenting and assisting them, triggering increased inequality. Tesla is not left out of these AI issues. The automaker's full self-driving software is yet to be fully developed, and there are still concerns about its safety compared to human driving. Since the responsibility rests with the driver and not Tesla's system, it is considered a Level 2 driver assistance system despite the name. Tesla's FSD has been sort of a 2 steps forward, 1 step back type of program, as some updates have seen regressions in terms of driving capabilities. However, in all, Tesla's move towards achieving autonomous driving is one to be applauded, and the level of success that the automaker has achieved so far is quite impressive. Where do you see Tesla's AI in the next 5 years? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.